This REIT is the 5th best performing REIT year to date with a 6.6% gain. It owns 3 malls, Causeway Point, Northpoint, and Waterway Point, which is supposedly very near JB. So with the new RTS that will link Johor and Woodlands, there are concerns whether all the shoppers will flock to JB or not, and even Minister Ong Ye Kung has mentioned that RTS to Johor could change the shopping landscape. Here's what he had to say.
We're going to have RTS next year, end of next year. If everything goes smoothly, it will open 10,000 passengers per hour each way, 100,000, 200,000 exchanges a day.
Yeah.
Right. I think it changes the landscape totally. But then going to Johor is easier than going to Orchard Road. Going by the causeway, they felt that immigration is not that big a hassle, which is a similar experience I had when I traveled from Hong Kong to Shenzhen. And I think people are feeling that kind of ease and convenience. And with RTS, it's going to be even easier.
Now today I'd like to share with you the elephant in the room, which is, will it deplete shoppers to these malls? And I'll justify my point of view as to why it wouldn't make such a big difference. The second part, I'll share with you the latest numbers on this REIT. And the third is how I've invested on a chip. So if you're keen to find out, continue watching. Hi guys, welcome back. Let's start with the first chapter, which is why I think the RTS wouldn't be a mall killer, or it wouldn't make such a big difference. I drove by the causeway, it looks like the pillars are formed, very soon it's going to run, our deadline is going to meet. By the way, if you've been to Johor enough, you do know that how we work here in Singapore and how they work there is very different. The government there is also not the same as the government over here. Let me pour some cold water. Bottlenecks. The RTS terminates at Bukit Chaga station, and without efficient bus connections, commuters will still rely on cars, taxis to complete their journey, leading to congestion around the station. Transport system, it needs to connect. It's like a pipe of water like that. If you don't connect it well, there will be bottlenecks, correct? That's why Singapore side, we built the TL, the Thomson East Coast Line. Johor side, LRT or tram bus system. LRT network takes 5 to 7 years. They only started thinking of how to solve it now. So what is the solution? Of course, the faster one, and of course, the cheaper one. As of February 2025, it is confirmed that a bus tram network will run the last mile after you cross with the RTS. This is possibly what you're getting into. No joke. Maybe after you'll think it's better, maybe just walk to City Square, forget about it. Then what about the trip back? Would you still get stuck in customs or not? Think about that. What would the experience be? You've seen pictures before, people crossing by the pedestrian bus route, taking hours to clear JB. JB still has something to offer. Singaporeans who like going to JB are already going every weekend. Singaporeans who don't like still wouldn't go in. And just as a sub point, we still need to spend our CDC vouchers in Singapore, correct? I feel that shoppers will still remain. With this white elephant cleared out of the room, let's move on to the second chapter, which is the latest numbers of this REIT, which is none other than Fraser Centrepoint Trust. Now before I get there, help me smash your like button, because I'll be revealing my own CDP account to show you my dividend investing journey. Hopefully it can inspire you further, so subscribe and get notified. And as always, if you like any links for today's research, I'll leave them also in the summary sections below. Now let's move on to this second chapter, latest numbers on Fraser Centrepoint Trust. In the highlights, you would see that gross revenue has inched up by 7.1% year on year. Net property income has also inched up by 7.3%. All in all, this is allowing a higher distribution per unit to shareholders from 6.022 to 6.054. And to understand what is driving these better numbers, I think this summary table shows exactly what you need to know. On the very left, retail occupancy. Fraser Centrepoint Trust's malls are seeing almost 100% in occupancy. If you go down to any of the malls, including Next, you would realize that it's pretty crowded, correct? Online shopping came during COVID, but did not leave a lasting impact. RTS will give more options to travel to JB, but it may not change how shopping will be done. As long as occupancy stays strong, you would realize that there will always be opportunities to increase the rental rate. This is what we want as REIT owners. Rental reversions for first half 2025 was up 9%. Moving forward, let's continue to track these two numbers to understand the health of Singapore heartland malls in terms of how they are doing operationally. Then the second column, year-on-year tenant sales and shopper traffic growth. As long as tenants are making more money, they will always be willing to pay more rent. And again, with government measures or CDC vouchers, I think there will always be some support for local spending. Another way to track is this retail rent rate. Suburban malls, which is what Fraser Centrepoint Trust owns, is the red line in the middle, and that has steadily climbed since 2018. Next thing to track, which is especially important for REITs, aggregate leverage and average cost of debt. This will likely inch up to 39.8% after the acquisition of Northpoint City South Wing. I'll cover that in a while, but more importantly, the cost of debt is dropping now and is right now at 3.8% only. One of the key reasons is that Fraser Centrepoint Trust has managed to do refinancing only at 3.3% for latest issue. This is also very recent in March. 80 million loan for 7 years at 3.3% only. So if cost of debt dropping, this is of course good news to REIT shareholders, correct? Because your expenses will drop, which means more potential payout in dividends. I believe Fraser Centrepoint Trust can continue to refinance at lower costs because if you see in terms of SG 10-year yield rates, not the Fed overnight rates, not US 10-year rates, you would see that in this chart, it's coming down, correct? Now only at 2.5% plus. This was roughly what was experienced in 2018. So no big deal. So REITs can really survive at this rate. And if it trends lower, this is tailwind. So good news on the loan front. And I think I can make a quick conclusion. At $2.25, which is today's trading price, if it drops less than $2.10, I would call it cheap. Let me know in the comment sections whether you agree with some of the analysis. And let's move on to the third chapter on why I bought and how I bought it on a cheap. It relates back to this recent acquisition of Northpoint City South Wing from its parent Fraser and TCC. This deal was 1.1 billion plus, and they did the acquisition with Fraser Centrepoint Trust taking on loan, rights issue as well as perpetual bonds. If you look in terms of the presentation debt, it is expected to be yield accretive, which means dividends should increase by 2%. If not, why acquire, correct? But as always, when we see presentation deck, they will always say only the nice things. Do note that Fraser Centrepoint Trust once acquired Bedok Point from its parent at $129 million. It then sold back to its parent at $108 million, losing $21 million as you can see. Bedok Point right now is redeveloped into a mixed development with residential unit. I brought up this as a reminder that not all transactions are favourable to REIT shareholders, but I also do think that Bedok Point's location is a bit off. Naturally, it doesn't yield a lot of profits, owning it for retail. Northpoint City, on the other hand, seems to be well connected. I don't stay there, so let me know in the comment sections what you think of it. From my rough look, I do think it's a good and busy mall. So for myself, I've taken action. When they did a rights issue, I actually oversubscribed, as you can see over here, by 839 shares. I was issued 1,161. I rounded up to 2,000 and bought it at $2.05. Just a quick tip, sometimes you can round it up also, and as you can see over here, allocations were given. Hopefully Fraser Centrepoint Trust continues to grow, and with all the global turmoil, I think Singapore malls are just a safe haven to be parked in. Current yield again is 5.5%, which I think is pretty good, and whether there's recession or not, I think their malls are still going to do quite well. Speaking of that, let me invite you to this previous video I had, which is REITs going up because of recession fears. Is it true or not? Check it out. Hopefully it can inspire you further in your investment journey, and I'll see you there too. Take care as always. Goodbye.